In business news this hour, Singapore shares took a beating today as investor sentiment was dampened by concerns over the novel coronavirus outbreak and the raising of the nation's alert level to orange. Now, the benchmark Straits Times Industrials Index fell 0.6% to close at 3,163 points. Experts say while tourism and transport-related sectors are hit, others like healthcare are expected to remain resilient, but they also warn that the economic impact could worsen. Brandon Tonoto explains.
A decline in air traffic through Changi and more hotel room cancellations. These sudden changes are weighing heavily on the tourism and transport sectors, and it's having a knock-on effect on other industries like entertainment and transport, sectors which have seen sell-offs in the first trading session since the risk assessment for the novel coronavirus outbreak was raised to orange. Shares of gaming operator Genting Singapore closed nearly 3% lower. Taxi operator ComfortDelGro and Singapore Airlines also closed in the red.
The fact that we do have the declines really sustaining quite a bit of cautiousness cutting across the region, but really I think this is not really restricted to just perhaps Singapore. Across the region, Asian markets are down as well, reflecting the kind of concern of the spread of the coronavirus beyond China. So it's a bit of a wait-and-see attitude that's likely to hold.
Some sectors, however, are getting a boost because of the outbreak. Shares of supermarket operator Sheng Siong gained more than 3%. It followed the rush by consumers buying essential items in bulk over the weekend. Shares of Clearbridge Health also climbed more than 13%. It owns clinical labs in the region, and its services such as testing for viruses are in higher demand. However, experts warn that the economic outlook isn't too upbeat. Now, experts have said that there are concerns that the economic impact from the novel coronavirus outbreak could be deeper than SARS. Now, that's because over the years, the Singapore economy has become much more integrated with China than in 2003.
In terms of the non-oil domestic export, for example, China is also the largest market for us. It accounts for roughly about close to 16% of our total non-oil domestic exports. We do expect some extent of disruption in the supply chain within China. And China is Singapore's largest export market. Singapore export a lot of high-end parts and components to China. So if there is extended closure of factories over there, it will have a spillover effect on Singapore's manufacturing sector.
Market watchers expect the STI to be kept at about 3,200 points, at least until the end of the first quarter.